good news for retail because at the end of the day, their costs will go down. These tariffs caused unnecessary stress in the supply chains, caused retailers to raise prices. It lowered their margins. So all that is now set to reverse. We still don't know what the magnitude of this will eventually shape out to be. There's our analysts here on the government side think that while these have been overturned, you don't know what else could be added. So I wouldn't say we go to zero. That's probably not happening. But I do think that as these tariffs get overturned and as costs drop for these retailers, we should see a pickup in margins in 2026 and also a pickup in demand because, the consumers for a long time, or at least over the last year, have been very concerned with inflationary pressures and just prices going up. So all that will help hopefully ease demand too.
You mentioned prices going up. Do we know of any companies, any brands that raised prices because of tariffs, where they made that link very explicit?
Yes, Nike was one of the retailers that had explicitly said that it's raising prices, not on everything, but on goods that were over $100, notably over $150. They had taken a mid-single digit price increase. So prices did go up across retail from tariffs. They didn't go up 20, 30%, but they did go up in the single digits, mid to high single digits.
The New York Fed is out with a report recently saying that about 90% of the tariff costs were borne somewhere in the U.S. chain, whether it was the importers, the companies themselves, consumers, and maybe only 10% by exporters.
Yeah, Kevin Hassett disputes that, of course.
Yeah, of course that he does. But I'll go with the New York Fed. They're pretty solid in their numbers. So from your perspective and the perspective of the retailers, Poonam, how much do you think like the Nikes of the world kind of took in their margin versus passing along to consumers?
Yeah, I would say that I think there was a shared cost across the tariffs between the suppliers and the manufacturers. So it wasn't 90-10. I find that hard to believe because if that was the case, a mid-single digit price increase wouldn't be enough to offset the cost pressures. It'd have to be higher. But that said, I do think that, they did see their costs rise, and they did try to offset it not just through price increases, but also through efficiencies within their organization, whether it was across payroll, whether it's through technology. We've heard a lot about these AI investments, and they've really helped improve efficiency across the organization, but we haven't seen that in the numbers. And my answer to that is it's not in the numbers because it's really just been helping offset these incremental pressures from tariffs.
We've seen companies like PepsiCo move to cut prices on some of their products, their snack products. And I'm not comparing snacks with clothing or sneakers, but if a company like Nike raised prices because of the tariffs, is there any world in which it might reduce prices or lower prices because tariffs were removed?
So I think the consumer is expecting prices to go down when the tariffs are removed. The big question is if prices went up, let's say 10%, are they going to come down 10%? That typically doesn't happen. They don't necessarily drop to the same extent they went up. But yes, would you have some relief from the cost increases? Sure. I think retailers like Wal-Mart that really push the pedal on price much harder and care about offering that incremental value to their customers, that's what they stand for. Those are the retailers that are probably going to push the pedal much harder on price when they get the relief from tariffs.
So what's just broadly defined right now, step back a little bit, Poonam, what's your view of the consumer here based upon kind of the results you've seen from some of the retail companies you follow?
I think the consumer is stretched. I think they're under pressure, but they're making choices. They're being selective. They're shopping at retailers that offer them convenience, that offer them speed, and that offer them something differentiated. And I think that's been the story for a little while now. I think that continues. So retailers like Amazon have been doing well because they offer both value, convenience, free shipping, and they've done well. Walmart, we heard from, they also did well on their value proposition. So I think it's those retailers that really stand out in the crowd, or those that have a fashion element, whether it's Urban Outfitters, with just the right assortments that's attracting these younger shoppers. They're the ones who are doing well.
What does this mean for furniture companies like Wayfair? And I recognize that Wayfair doesn't make a lot of its own furniture necessarily. It's outsourced a lot of that. But have they been explicit in how much tariffs have hurt them? Because most of their manufacturing is not done in the United States. I'm guessing it's done overseas.
It is done overseas, but I think with Wayfair, it's a little tricky because, as you said, they are a marketplace, right? So when you think about Wayfair, they have thousands of suppliers to choose from, or manufacturers or sellers. And if the seller wants to make a sale, they can go from one seller who may say the sofa is $1,000 and I have a 50% margin on it. But then there's seller number two who says, well, you know what? I'll take a 15% margin on it because I want to get the sale. So the diversity and just the choice that they have on who they bring on board to offer the compelling prices has helped them offset a lot of these tariff loads that others that are vertically integrated have to deal with directly.
Poonam, we heard a lot of companies in retailers, but just across the economy, talk about shifting their supply chains to maybe parts of the world that are less encumbered by tariffs. Have you seen that in the retail space? Like, is Nike making shoes in Vietnam and not China or anything like that?
Absolutely. The supply chain shift has been going on since the first round of tariffs, actually, and it's only been pronounced since last year. We expect supply chains to continue to be diversified. The only difference with this ruling being overturned is that the urgency has somewhat been moderated, so you don't have to be as reactive as you would have been last year. You can take your time and be more strategic about where you want to be diversified. But I don't think that just because the tariffs are overturned, now everything will, go back to China. I think the diversification step up is here to stay.